Brokers Alliance and the National Insurance Clearinghouse present the Business Insurance Zone, a Bravo video event. Broadcasting in HD 1080p on Vimeo, YouTube, the Insurance Newsnet, Agent Navigator, BrokersAlliance.com, and on Facebook, LinkedIn, Twitter, and the Insurance Forum. And now your host, the whiz of the biz, Steve Savant. Well, welcome everyone to the Business Insurance Zone, the talk show that spotlights insurance in your practice, keeps you up to speed on insurance news and products, features insurance strategies from top advisors. Get in the zone, the Business Insurance Zone.
Our email is thebiz@brokersalliance.com, or you can call us at 1-800-290-7226, 147 for any of your life, DI, LTC, annuity, and or group pension plan quotes. Remember, I'm not a tax advisor or a CPA or any other kind of legal fiduciary. So if you hear anything on the show that's a great planning strategy, don't forget to check with your attorney, your CPA, and if you're with a broker-dealer, of course, your compliance officer. I'm with today Marcy Pruitt, head of our disability division for Brokers Alliance. We're talking all day long about all that is disability, right? And today, on our first segment, I want to talk about this, and I think it's a definition issue. That's why I want to flesh this out today. Marcy, own occ. I might have a regular blue-collar job. There's classifications here, or I'm so specific as a surgeon, I need to protect my ability to do surgery, even if I could actually teach medicine. So give us a little walkthrough on own occ, a little bit of the definitions from an industry point of view, and then we'll break down these divisions.
Okay. Well, there's 3 or 4 levels of own occupation protection. The lowest tier is your any occupation, and that is, as you mentioned, blue collar. Basically, after typically 24 months, any occupation that you're reasonably suited by education, experience, or training, the carrier is going to want you to go off claim and go and do. That is typical in your real blue-collar policies. In most group policies, it's written that way as well. The modified ONOC, which is your middle of the road, covers the masses. It's a great definition for most individuals, would be unable to perform the important duties of your occupation and not gainfully employed. Now, that isn't like any OC. They're not requiring you seek gainful employment, but if you do elect to go out and seek gainful employment, then your claim would be reduced by your new income. And if you're not highly specialized, that covers you sufficiently, because in the true specialty own occupation, as you mentioned, that protects you in your specialty. So if you're not highly specialized, what would you go do that's outside of your specialty? That's why modified ONOC is satisfactory. The surgeons, the attorneys, they're looking for that specialty ONOC, and they will be as specific as the specialty that the AMA recognizes.
So if I had a litigator that was huge in the courtroom, he had verbal skills, transmission, communication skill sets, highly tuned, and he somehow, some way could not speak any longer, but he could still process work in the office. He could probably write emails, do briefs on it, but his specialty was litigation in a public setting. He would actually be specialized.
Right, absolutely. So, and you can have the specialty for as a litigator. So if you could do other areas of law, but you are unable to perform in the courtroom as a litigator, then you would be considered disabled.
Okay. So, and the same thing with as a physician, he could always default to a general practitioner, but if he can no longer do open heart surgery, as an example, or orthopedic surgery, he was very specific. Brain surgery,
and even in orthopedic, they'll be very specific and say hand surgery, or if you have a specialized area within your specialty, it can be that specific. So
the definitions per carrier have to be pretty tight. I mean, you have to pretty much know that. And in our area, don't you feel like sometimes, Marcy, you're an attorney almost? I mean, you have to understand these definitions, right?
Right. And if you were to put a room of specialists or experts, and I have peers that are expert witnesses at trials, there's a variant understanding of that, and it really boils down to what are you doing at the time of disability, what are your duties, and where does your income come from? So because even if you buy a policy that's an ONOC specialty for something, and then you go into a new field, it's what are you doing at the time of your disability. So most of the leading carriers, even if there's not specialty definition, that's what it boils down to.
Is there we have so many carriers in our inventory of disability companies. Is there a carrier from an own-oc specific, let's just do specialty first, specialty that you say, they're very good about definitions, they're very good about underwriting. If you have a specialty, I'm looking at this carrier.
Yeah, there's 3 carriers that actually put the specialty language in the contract. The others will typically say, as I mentioned, what were you doing? What's your occupation at the time of disability? What are your duties, and where does your income come from?
And what 3 would that be?
Well, the Guardian, Standard, and Union Central are the 3 that will lay out a specific specialty
now
in the contract.
I think and Union Central.
Yes.
Okay. Well, if I remember, and please correct me, I'm just going off my memory, Standard's been in this game a long time. Absolutely. So is Union Central, and of course the venerable Guardian. I mean, they've been around forever. So these 3 really have specific language. So if you have that kind of specific specialty, if our advisors are listening to right now, can they call you to say, is that going to qualify for a specialty ONOC?
Right, absolutely.
Okay.
And they really follow off the AMA list. After recognized specialties under the American Medical Society.
Do you have that list?
We do, yes.
So if anybody want to call in, they could just
Sure.
ask you for it. Okay, again, if you want to call Marcy direct, 1-800-290-7226. Her extension is 126. Her email is marcy@brokersalliance.com. And just call her for any of the things we're talking about, especially like this list. And you're really interested, I have clients that are in specialty items. I do believe in what you guys are talking about as far as paycheck protection,
Right.
that I want to introduce it into my practice. I want to insert it into my financial planning now. So I want to make it part and parcel of how I look at indemnification when it comes to protecting my client overall. So when I'm looking at ONOC and I go down to modified, now I noticed that, did you say the 2-year, actually before I go to modified, yet the 2-year blue collar, kind of everybody, that doesn't go off forever. They only say for a shorter period of time.
Right, 24 months, maybe 5 years, typically 24 months.
24 to 5 years.
Right.
Is that a good market to go after, Marcy? Is that an average market? What kind of market is your 2-year blue collar, pretty much, anybody's occupation?
Well, I mean, that's a good market if they need income protection. A lot of real blue collar may have some kind of group, weekly payroll deduct type policy. They're typically limited benefit policies, accident only, or specific illnesses, or off the job, offsets against workman's comp. But, if you're in that market, I mean, they need paycheck protection.
If you were hurt on the job, got workman's comp, would your DI still pay the full amount, or will it be a difference? Would it be the
It
offset?
should pay the full amount, but the contract will specifically say whether it's offset. Most of your white-collar, professional, skilled, technical type policies you sell, you do not want that offset in there.
Right. And do you see anybody in the blue collar that plays pretty well in underwriting, gives them pretty good backs, they won't have the offset? Who's that?
A surety, Illinois Mutual, Mutual of Omaha. They're 3 good ones in the blue collar marketplace.
And Mutual of Omaha.
Yes.
Okay, the Wild Kingdom. Carl
Absolutely.
Perkins. Yeah. Well, when I'm looking at, now let's go back to this middle ground, this modified.
Well, and in addition to modified, I wanted to say because I had said 3 or 4. The 4th is a transitional loan OC, and that's important to note because
What's that about?
that's like your specialty, but once you hit 100% of your new earnings combined with your disability benefit, then it begins to offset. So it's a step up from modified, maybe a step down from specialty, where you can only double dip, so to speak, until you're at 100% of your pre-disability
So
earnings.
the trans is like, well, you have specialty, then you have trans, then you'd have modified, then you'd have at the bottom end what would you call the
ENEOC.
ENEOC. Okay, ENEOC.
And it's not just the specialty ONOC. I kind of want to go back to that. For certain physician specialties, that's important, but you also look at the price, can it be underwritten, and the combination of riders that are available when you do that. And, so it's specialty ONOC is important, but those carriers that, other than those 3 I named, they have own occupation protection. They just don't have the specialty language in the contract. But again, at the claims time, their interpretation is if you earn your income and your duties are in a certain specialty, they're going to adjudicate the claim in favor of the client, but again, it's not laid out in the contract that it's specialty language.
Marcy, do you have anything that's like an attachment that we can send to our advisors if they request that kind of outlines the four basic language so they kind of see where it is so they can make a judgment call before they start talking to their client?
I believe so, yes.
Okay. Well, again, if you want to pick that up, it's just Marcy at brokersalliance.com or her toll-free number, 1-800-290-7226, extension 126. When I'm looking at modified, I want to go back to that now, just to make sure I covered it. On modified, I'm trying to put my arms around the idea that I'm going to have some exclusions on this, right? I might, or not necessarily.
No, not modified underwriting. Modified own op just means it's your election to seek gainful employment. If you seek gainful employment, your claim will be reduced.
Well, what would be the motivation to seek it then?
Well, a good question, and you're never forced to, just to be productive. And again, if you were making X amount, and if you purchase the full amount you were eligible to do, that's going to be roughly 60%. There's also a cap, so depending, you probably have a shortfall. You want to go back to work to make more money.
Or your investments are making up the difference and you're going to stay on the sidelines.
And you can. And that's why the policies are very comprehensive, very excellent language, much stronger than you find on a group basis, which you pay more for individual policies. And that's why at the time of underwriting, they're very strictly underwritten, like we talked about some of the underwriting aspects of it. Because once you purchase that policy, it can't be taken away. And
it's, again, on a modified, just want to make sure it's elective gainful employment.
Right.
So the definitions are pretty tight on that. And it got to carry your choice?
They all have that.
Oh, they all have it. So there's not one over the other. So, okay.
Not for modified.
All right. Well, listen, coming up in our next segment, we're going to take disability, the contract chassis, and then we're going to start talking about riders that can go on top of these chassis. You can order any of the things we're talking about from Marcy. Say, I need an explanation. Just write her, Marcy at brokersalliance.com, or call her 1-800-290-7226, her extension 126. You're listening to the Business Insurance Zone, the talk show that focuses on insurance in your practice. We'll be right back after this break.
Steve Savant here. For years I've heard that less than 2% of all term life insurance ends in a claim. That's not many, and clients had to die to receive the benefits. That's the old term insurance. Now start selling the new term insurance. The term insurance that covers your client through a chronic illness, a catastrophic event, or a terminal diagnosis, and pays their monthly premium during extended periods